Rents continue to surge in the Chicago apartment market, which ranked among the nation's best in the year ending Q1 2012. And given that, plus some strong occupancy rates, construction is ramping up again, particularly in the urban core submarkets. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Windy City update. The big story in Chicago is rent growth. Annual rent growth levels are at the highest point seen in any period over the past 2 decades that MPF Research has been tracking it. Rents up 6.4% in the year ending first quarter 2012. Now, Chicago is not traditionally a high rent growth market. At the peak of the previous cycle, rent growth got as high as 5%, but the norms were kind of closer to the 3-ish territory, so this is quite significant. And let's take a quick look at occupancy, and then we'll take another look at one of the key trends driving those rent growth numbers. Occupancy in Chicago came in at 95.3%. Pretty flat over the past couple quarters, but still up 1.5 points year over year. And over the past decade, the average here has been around 94%, or a little hair above that. And so we are above that historic average, though not quite at peak levels. Now let's hone in on 2 submarkets that are really driving some of these overall fundamentals trends that we've seen in the Chicago apartment market, and those are the downtown submarkets of the Loop and also Streeterville River North. These 2 areas combined added 6,267 new apartment units between the start of 2008 and the first half of 2011. And a lot of that, those properties really weighed down overall apartment fundamentals for quite some time, as these properties went through a prolonged lease-up stage, dealing with not only the recession, but also a lot of shadow market condo rental product that was competing for the limited number of renters. And what we've seen is that as job growth has kicked back up again, these properties have leased up quite well, occupancy rates have gone up, and that's allowed for some significant rent growth. And now we've also seen new supply levels drop off significantly as well, and that's what's helping drive up rents. Now, these were Chicago's top 2 submarkets for year-over-year rent growth, as you can see. 13.4% rent growth inside the Loop and 9.5% growth in Streeterville River North, and occupancy is now up to 95% in the Loop and 96.7% in Streeterville River North. Now, with that rebound, apartment developers have certainly taken notice. There are now another 3,225 units under construction as of first quarter 2012, and that represents nearly 3/4 of all active apartment construction in the Chicago metro area. And all of these projects in these 2 submarkets, these are high-profile, big apartment projects. 5 of these properties are at least 40 stories tall or more, and the first group of these is going to complete at the end of 2012. And if that's not enough, we're going to see another wave of new starts coming up, because there's a lot of more big projects in the pipeline for those 2 submarkets. And in part for that reason, look for the pace of rent growth to slow down in the Chicago apartment market. These 2 submarkets played such a big role in driving up the metro's overall rent growth number in this past year. And with so much construction coming back in line, we're likely to see the pace of rent growth slow down a bit, and that's going to affect the overall Chicago metro number. So we're expecting to see rent growth of about 5% for the Chicago metro over the next 4 quarters. And that wraps up for Chicago. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.